Hello and welcome to Trading Growth and Value Stocks. My name is James Boyd. We welcome you on this pre-July 4th eve, let's just call it. We're a couple hours early, but we're mentally going there. So we'd like to welcome all of you here today. Kevin, hello to you. Andrew, WW, hello. JP, welcome to you. Dean, welcome. And also Debbie, Robin, and many others. Now, normally we talk about some interesting stocks. Sometimes there's more kind of things to talk about than others. There's a number of things here to talk about that are kind of at a very timely spot technically on many of these examples we're going to talk about. A lot of the examples we'll talk about, we'll look at from a technical standpoint, but also a fundamental standpoint. And I also want to talk about some leadership within their areas as well. And we're going to really cover some ground of not just one or two different sectors, but a number of different sectors here today. So we got a lot of ground to cover. We're not in fifth grade, so we can cover a lot of ground and not get overwhelmed. That's what paper's for, or if you have an iPad, take some notes down. Go back and review it. This session is being recorded, and we're great investors, and we can cover some ground. And that's what we're going to do here today. Now, just real quick, remember, I do post educational content on X, do post throughout the day. Check that out. There's my handle. I will also post a link in just a moment. We also have Connie Hill with us, and we welcome her as well. At Connie Hill, or excuse me, Connie, if you could actually put in your handle there, I'll pull it up in just a sec. But you can follow Connie as well. That way you can just go directly to Connie's link. Now, just real quick as we get started, remember the information here is provided for general informational purposes only. Schwab does not recommend the use of technical analysis as a sole means of research. Technical analysis is a way, not the only way, to spot investing, trading ideas. Also, remember when we talk about examples, they are just that. Investing involves risk, including loss of principal. Also, remember that coming up, we have, if you go to schwab.com/events, you'll actually see we'll be coming back to New York August 8th to 9th for the Technical Analysis Ops and Strategy. Same thing, but in Chicago, and also there in DC as well. If you're a Schwab client, you could actually attend for free. Join us live. Now, just real quick as we get going here, I want to kind of talk about some of the futures, just we're going to call it the prices. And this is also going to kind of play into some of the things that we discuss. So first off, I'm just going to mention a few that are kind of standing out, okay? We said keep an eye on precious metals. The precious metal, and I won't bring it up, that is actually still getting a push is copper. Think to yourself, if copper goes up, what stocks go up? Silver is still holding in there. Lagging is gold, okay? Now, also remember, last Friday, Kevin and I had a kind of a nice discussion on the new asset class, and it's to kind of give you an idea, it's sitting at 110,000 right now. Keep an eye on that as well. We're going to talk about two different stock examples that are coming on the back of that in just a moment. But that new asset class we talked about, could it hold above the 20-period moving average? It has, which means it's actually holding closer to resistance. It has. And that's actually getting a pretty decent push here today. Keep an eye on that. Now, when we talk about, just real quick, indexes, okay? Well, you can't be mad at it, okay? I mean, the market tried to pause yesterday. The moving averages never changed color yesterday on the S&P, and it's just still green. I'm sorry, okay? You think I was waiting for a deeper pullback, and the market says, okay, let me hit a brand new high just to annoy the bears. Okay, so fine. I mean, who's mad? Okay, now if we look at, let's say, the NASDAQ, you're going to see that is still fighting at the 161 extension. If you look at the Dow Jones itself, it's down 24 points, a little bit more of a pause. But the push is actually really coming from the SPX. Now, if we kind of break this down and said, well, where in the SPX are we getting that push? Load the sectors for just a moment. I'm going to take a look at this on two different ways. Number one, the percentage change. The semiconductors, they actually fire back, to say the least, okay? And you're going to see that also what also got a push in here. We talked about basic materials yesterday, and I'm going to plead, do not think that the investor has to buy individual stocks. Okay? No one ever said you had to do that. Some investors, what they do is they buy the basket of stocks. Okay? The investor could buy a basket of semiconductors. There's a couple different types, at least two main ones. Kevin talks about those a lot. Okay? We're going to actually see that the materials, which we talked about yesterday, they're still up there, a little follow through. The new one here today with crude getting a little bounce is the IXE, okay? And what you're now going to notice is probably something, let's say a little new, bouncing back. We actually saw technology. I'm going to keep saying transportation. That's not IXT. It's close, okay? But transportation, so it's technology, semis, okay, bouncing back. Semis, the big one. But what you're going to see is transportation not included on this list at all. But also what we're seeing here a little bit here today is discretionaries. Let me give you a little taste of what they look like, okay? So if I said, hey, what does that semiconductors look like? That's what I kind of mean. They fell down in the last 3 days or so, or at least kind of yesterday they did, and then today fired back. If you look at a number of semiconductor stocks, oh my gosh, wow. There's which ones, okay? There's a couple of them. Now, what does basic materials look like? Well, basic materials, IXB, this is what it looked like yesterday. It was hard not to see it. If you tried and closed one eye, it was almost impossible not to see it yesterday, because if you did your due diligence and you went through your checklist, that was actually hard not to see it as the investor got poked in the eye. Now, if you take a look at this today, it just kind of said, look, I ain't done, okay? It punched to the upside again. Now, remember, when you kind of think about the base materials, what is leading that pack? We go back to, let's say, Market Watch. We're going to go to Visualize. If I pull that up and said, okay, what is moving in the S&P 100? Go to, let's say, materials for just a moment. Now, if we look at the S&P 100, there's only one stock, Dow. If you look at the S&P 500 and actually said, give me the material stocks, what is moving in that area? Now, again, it shouldn't be that hard to know that because, well, if you're watching, let's say, copper, okay, probably going to get a push there. It is. If we also see another one that is steel, if you've been watching steel in the last couple of days, it's also been moving. And also, if you've been watching one that's been trying to bounce off the bottom, got a pretty big move here today, ALB, okay, as well. Also keep an eye on some of these other ones that are kind of more the chemicals names like CF, Moss, and so on, and FMC, and so on. But right now, some of these FCX, and et cetera, new for the steel, getting a little bit of a push, okay? I know we don't normally talk about base materials. Base materials only represent about 3% of the S&P, but base materials, as we started the new quarter, July 1st, there was a rotation into materials. Now, people ask, well, how do you know there's a rotation? We're watching the price movement. If something's smashing through the ceiling, someone's moving some capital, okay? Now, if we went back to also discretionaries, okay, is there a little continuation there still? Yeah, brand new high, okay? If we went back to the IXM, is there a little continuation still there in that sector? And it's okay to say yes. Now, if we said, well, what does the energy space look like? Is it getting a little bit of a bounce? And if we look at, let's say this, what you're now going to notice is that space, which fell back down to the support level, even slightly lower, there is a little turn on this. And I'm going to repeat myself, and I never do this. That's a joke, okay? But no one said you had to buy the individual stock. The investor might say, I'm going to buy the grouping of stocks. There's a couple different options. A lot of people, when you tell them there's options, they get overwhelmed. Remember what many investors focus on: liquidity, 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 and liquidity, and more liquidity. Which of the energy ones really have liquidity? Liquidity, for our example, would be anything with 1 million shares on average or more. And if someone just used that criteria by itself, the number of energy examples get probably quite low, okay? Probably less than 5 if we just focus on liquidity. Now, okay, so let me repeat something. Base materials still continuing. Energy joining that. But again, we're talking about commodities there, okay? So the same theme. Now, also when we actually bring up, let's say, discretionaries, industrials, the IXM as well. And again, we're going to say we're going to actually also say transportation. And remember, when you talk about transportation, when we bring that up, we're really talking about Uber is really the big one. And when we take also a look at, let's say, that space, also keep in mind that when you have like stocks like FedEx, FedEx is probably the one, if we're talking about that, is trying to reverse itself. It's FedEx coming off the bottom. Now, we know in the world of the market, it's not just one type of setup. Some people kind of like to see these basing pattern reversals, and that's what's kind of nice. In the current market, there's a lot of different types of setups. Some stocks is hitting brand new highs. Some stocks are sending triangles. Other stocks are bull flags, and other ones are basing pattern reversals, okay? Now, let's kind of talk about just a couple stocks in the Dow space, and I'm just going to flash a couple for just a moment, okay? One of the stocks that we've been watching over the last couple of days has really been Nike, and I mean, this kind of makes you scratch your head. Why do people run a watch list every day? If you could just do the routine of looking at the Dow 30, S&P 100, the NASDAQ 100, these are not hidden. This is the one that actually broke up inside the old channel, and so far, not even really pulling back. When I say the old channel, what you're now going to notice is the bottom of the channel was like 70, the top of the channel is at 79. There wasn't much of a pullback. And so in our example, we talked about trying to buy the stock on the red candle above the moving average. And really since that point, it's gone up about almost 8% after that. Pretty strong push here from Nike coming out of nowhere, okay, gap to the upside. But the biggest thing you want to remember is this is a classic channel trade. Talk about those quite a bit. Now, the other one that's kind of been in that space, which has kind of sliced its way through a couple channels, is Caterpillar, okay? Caterpillar, like which channel? I mean, which one? And it's just kind of still going back, gone. Now remember, what's interesting about these, and I'm telling you right now, people don't understand them. They do not understand them. Because if you've never gone short stock or bought puts on stock or things like that, you don't understand when the stock breaks resistance, you can get 2 to 3 types of buyers happening. Number one, actual bullish investors buying. New. Second, could actually be investors adding to the position, okay? And the third is bearish investors covering their shorts, if you will. And what we mean by that is their short stock. So to get out of the position that they need to buy the stock back as a way to get out. And so you really have a threefold: new buyers, people that are adding to their current positions, and actually bearish investors. And I'm telling you, sometimes, not always, there can be an explosion of trend. So we always kind of joke with Caterpillar, meow. Okay, that has actually been quite a strong trend. Now, firing through some of these other ones, what you're going to notice on Amazon, we actually have like a trigger day. This is 2 days in a row where we've actually been closing higher than where we opened. This is closing higher than where we opened. Now, sometimes you can just get a close above the high of the low day in one day. But sometimes you can just get this close higher day. And it's not close above the high of the lowest most recent red candle, which is on June 30th. But this doesn't mean the investor goes to sleep, okay? Sometimes these bounces might do this, but the investor is still going to be watching that 223 area. Now, the paper money account already has 2 to 3 examples on this, but what we're going to do is right click at the high of that red candle. We're going to create an alert, and we're going to say, look, if we get at or above that level, let us know again, because that stock is thrusting or trying to get above and bouncing to the upside. Now, we've already done 2 or 3 examples on that, but the alert here, that's not an order to get in. That's just an alert, like alarm clock, a sensor, okay? Price getting above that price level. So this is an example still within the Dow. It's not hidden, okay? And what you're now going to notice is that continuation is still in effect. The trend line is still there, albeit that, hey, we've had to be patient for the last day or so, okay? Yeah, Luke says, meow, meow. Okay, some people get that joke. Now, what you're going to also notice is on AXP, that's actually one that was kind of interesting because we targeted out on that. Like Goldman Sachs, it just kind of kept going. And what you're now going to notice is Goldman Sachs hit a brand new high here today. The ones we're going to say keep an eye on before we look at new examples is Triple M. Triple M is kind of coming up into a major area of resistance. It kind of has like an inverse head and shoulder. Oh, let's go back. Kind of has like an inverse head and shoulder. So there's shoulder, there's the head, and then there's what you're going to see is a shoulder. And the 153 really acting like the neckline. Now remember, we're talking about industrials. Industrials. And if we take a look at this on a weekly chart, on the right-hand side, you really have higher lows. You have like an ascending triangle. Would it be surprising to see Triple M break out to the upside? Probably not, okay? Don't know if it's going to, but that's another one to keep an eye on. Now, last one I'm just going to kind of say in that space is Honeywell. Now, if you take a look at Honeywell, the stock kind of had a classic crossover. And a lot of times investors think, well, I got to come up with 52 different ways to consider the entry. And here's the deal. If you look at any stock that went up, any of them, look at any stock that went up, we'll show you a crossover. Okay? So the biggest actually thing is when we look at when was the two green lines on the moving average, it was on 625. When do we actually see separation in the moving average itself? June 26th. The issue is not the moving average. The issue is the investor thinking that they need to make it more complicated. That does not imply that every one of those trades work. It's just a setup. And that setup means the investor is going to take risk and see if it bounces. Now, what I want to do is I want to kind of talk about a couple stocks that are kind of setting up. Now, sometimes as a teacher, sometimes I look at setups, I'm like, they're fine, they're decent setups. But then other times you're like, wow, these are like interesting setups. Let me tell you what I mean by that. Now, that doesn't mean they're going to work. That doesn't mean they're recommendations. But there's a number of stocks at some very key technical levels here. Now, our discussion is actually really going to be kind of based upon the technicals, but also the fundamentals as well. Let me start with just real quick Oracle for just a moment, okay? Now, one of the kind of things that we're taught right at the very beginning is old resistance becomes new potential support. And what I want to do is if I zoom in on this, you're going to see that if I were to ask you a question like, where do you see resistance? You might say back, well, James, duh, the old resistance was 216. Now, what will happen is people will say a comment like, well, I want the stock to break out. What does that mean? Okay. Do you just want the stock to close higher? Do you want the stock to like open higher? What do you want? So we have a specific definition of what we mean by breakout. We want a green candle. The green candle is showing us that the stock closed higher than it opened. Okay. And we want the whole body of the candle above the resistance line. So it's not about where it opens. We want it to close higher than open, hence a green candle. So if we go forward to the very next day here for just a moment, was that a breakout? So that's a classic example right there where the price opened higher, but the close was lower than the open. So per our definition, that does not meet breakout criteria. Now, is it a bad sign that it actually went out and made a brand new high? No, not at all. That's good. Okay, now go forward to the very next day. But it's not per what we're talking about. That's not the entry setup. Okay, now does that mean that the investor can't look at it the next day and see if it does that? No, that's the point. Okay, that's the point. Now, if we kind of said, well, where would this kind of meet the criteria? Well, if you actually had a stock hitting a 20-day high, a 55-day high, it would actually be probably coming across the script on the market watch. Okay, because it hit the 55-day high. So it's probably likely that we're going to see that. We go forward to the very next day. Is that a breakout? No, it's not a breakout. Red candle. Okay, go forward to the very next day. What do we got here? Now, remember what we kind of said. We want to see the open and the closing price. Where did we open? We opened up at 217.68. Where's the close? 227. Now, if we take a look at this, what you're now going to notice is of the 2 days, okay, when we look at this, we say 1 down day, and then we got 2 down day. So what we're doing is, and by the way, we could even say, well, James, if I go back further, that's not true. 1, 2, okay, 3. Okay, so we have 3 most recent red candles. Okay, now of the 3, which is the lowest? Well, I don't think anyone's going to really have a tough time seeing that number 1 candle is lower. So the reason why there's a dot right there is it's saying, hey, we're closing above the high of that day right there. Does that make sense? I need to make sure we're on the same boat here. Are you with me on that? Okay. So when we look at the low days, we're looking at the most recent lowest red candle. Why do you not include this green candle? Well, because that's a green candle. We're looking at the lowest, most recent red candle. Wonder if there was only one of them. Then we're going to look at the last one. Wonder if there was 2 red candles. We're going to look at which one of the 2 is the lowest. Wonder if there's 3 red candles. We're going to actually look and see which of the 3 days is the lowest, most recent red candles. Wonder if there's 5 red candles in a row. Then we're going to look at the 5 red candles and ask ourselves, which one is the low? That's all, okay? The red candles are really telling us where's the low days, okay? Now, if we look at this, if we went back to this chart for just a sec, we're going to right click on this chart. We're going to go down to, we're going to go to buy custom. Let me bring that up just real quick. Now, what I'm going to do is I'm going to go to Oracle for just a sec, and I'm in the paper money account, and you'll see that there. We're going to right click on the price graph. Now, the upcoming, you're going to see like there's an icon, okay? And the icon is not earnings. That actually is a dividend, okay? Now, what we're now going to see in this case is we're going to open this up so we can see it. And what we're going to do is we're going to kind of use this old plank. Now, a lot of times people kind of, when you look at a setup, sometimes you feel like you're a little late. Other times you feel like, man, I nailed that entry, okay? If we kind of said, was this the first day of the breakout, the second day, the third day, and the fourth? No, this is day 1 of the breakout. Does that imply that this is guaranteed to go up? No, it's not, okay? But we're going to see. Sorry about that. It's what happens when there's some security that drops and it cuts the internet. So just real quick, what we were saying as we zoomed in, we went back to this level, and that level was right about 215, okay? And then what you're now going to notice is we just set a stop below there being about 215-ish. You're now going to notice that also that we have that stop set right at 210.91. Now, what you're now going to notice is the question now really becomes, well, what's the target, right? Well, sometimes not everything has a target, and sometimes people don't want to always have targets. So what we're going to do is we're going to go back and kind of say, is there any price pattern on the chart? When we go back and look at like prior highs, okay, which was about 191, and then we actually dropped down, and then we rallied back up, many technicians are probably going to always consider using Fibonacci's. Not always, but probably that type of pattern, a prior high, a pullback, and then a price rally. Now, this one, what you're going to notice is if we did this, if I went back to where we had multiple touches, about 192, drop it down to kind of where we had 2 touches, it's going to get us into this ballpark of about 236, which is the 161 extension. Now, this is what some technicians call the path of least resistance, that we just extend the prior high. Now, you might be thinking, well, geez, if I would have traded that, we could almost already been there. This is not new, okay? Consider practicing this. Now, the other thing that some investors like to use is they like to really use the 200%. The 200% is not a Fibonacci. It's just using the channel. I don't know if I probably should not be allowed to say the word channel anymore, okay? But some people like channels, and what you're now going to notice is the 200% is just the channel width, and it's added on top of the 100%. And so some investors, they might be saying, you know, James, I'm going to set my target a little higher, right up around 264. Now, you might be saying, James, that seems a little pie in the sky, and I'd be plenty happy if it just went to, let's say, the middle of that. Well, if we did the middle of that, it's going to be like 250. Okay. Now, what we're going to do is we're just going to put, okay, the target right there, 250. Okay. Now, again, someone might put it higher. You just have to understand the higher that we put it, the less likely it becomes that it can hit it. Now, what I'm going to do is also consider how much capital is that, right? Well, we're going to have to go down and say how much capital could really be put to work there. Let's say if we did 65, and if we said how many shares is that, okay, it's going to be about 28 shares of stock, okay? So if I take this back and just say 28 shares, there's our number, right? So 20, there's the entry, and it's really at that price or less. Now, by the way, notice that in the after hours, this price is moving. The bid-ask spread is about 17 cents, 16 cents. Some investors might say, James, and actually, excuse me, we used to teach this class at 4 p.m. Eastern, so I was thinking that we're in the after hours. It's not, so it's actually still trading. So forget what I just said. But the biggest actually thing is we got about another 30 minutes here in the market. If we take a look at this, we're going to try to get this filled. Note the 28 shares, position size, target, and then stop underneath. Remember, the stop is a trigger to sell. It's not saying exactly that price that it's going to fill at. And if we actually go ahead and actually send that, let's see if it fills. Now, what's nice about this chart is on a stock position, we could see where the entry is, where it's trying to fill. And then there's the target right in the midsection. And you're going to see the stop underneath. Now, speaking of, okay, if we take a look at this, now, if it doesn't fill in the first 2-3 minutes, we'll go in and move it, move up or down a little bit. Let's imagine that it's already been 2-3 minutes. It hasn't filled. Well, let's just do this. Let's go to day. Let's go to 5-day, 5-minute. Now, what's the purpose of this? It's just really zooming in aggressively to where we are. So all I'm going to do is, that's where our line is right there, 227.26. We're 50 cents above that now. Now, what I'm going to do is left click on that and drag it up to where the current price is, send it. And so that just allows us to kind of try to move up the price to where it is. So it fills, we see that there. And now what I want to do is I want to go. Okay. What I want to do is I also want to go take a look at, just real quick, a stock. And one of them that I want to bring up, there's two of them that I want to discuss. One is Hood, okay? And the other one that I want to really bring up is Coin. Now, I want to kind of take a look at the fundamentals, because a couple weeks ago, we talked about companies that were unprofitable, turning profitable, okay? Now, what I want to do just for a moment, go to Analyze for just a sec. Now, if we go to Analyze and we go to, let's say, Earnings, okay? Now, if we do this, what I'm going to do is I'm going to pull it up and just say, okay, what do we got in terms of the fundamentals? Now, some of you might not be aware, okay? Every broker does not focus on the same thing, right? Morgan Stanley does things differently than Goldman Sachs, and so on, okay? Now, what you're now going to notice is there's some brokers that focus on different types of products and or asset classes, etc. Now, what you're now going to notice is this company, really actually one of the things they really focus on is that term right there, okay? And some businesses adopt technology faster than others. Some companies, not so much, okay? And it really has to do with their focus and maybe their clients in general. What do their clients want? Is there an interest to it? Does the business actually want to kind of get into that, etc.? It could also be even regulation in general of why some companies are slow to adopt new technology. It could be a number of different things. Now, what I want to do is just real quick is I want to scroll down for just a second. And if we kind of take a look at the business for just a quick moment, if we take a look at this, you're now going to see when we look at the earnings per share for just a second, and we look at sales per share, okay? I mean, you're going to see that this business kind of for a while, it hasn't been just a nice progressive trend to the upside. It just hasn't, okay? And if we went back and looked at those years, it was probably choppy to down. And the fundamentals kind of really showed that. If we take a look at the earnings per share, they lost. They still lost, hence parentheses, they still lost. And in 24, they finally turned positive there. Okay, welcome Silas. Now, what I'm going to do is if we go back and take a look at this on a quarterly, you're now going to see that we can actually see the data where we're starting to get into 2025. One of their better ones that have actually been in Q4 of 24 and Q1 of 25. So you got to ask yourself, what does the business do and what do they have exposure to? Now, with that product, you got to ask yourself, are there some tailwinds to any of those products, could even be regulation or prices in general, that might cause some investors to be interested to maybe use the technology? Now, what I'm going to do is if we go back to this for just a sec, this has been one of the charts, and I want to kind of just change this for just a moment. And the chart that I'm really going to look at in this case is just a good old 10-day exponential, okay, moving average, represented by the blue line, and the red line, which is the 30-day simple moving average. Now, this is the most foundational points, which is sometimes these moving averages can act like a gauge of momentum and support or resistance. If the price is above the 10-day moving average, we call it momentum. Price is below the 10-day moving average, lack of momentum, okay, bearish. Price is above the 10-day moving average, bullish, okay? If we actually get the direction, the incline of the line, if you will, if that line is pointing to the upside, bullish momentum. Another way you could actually look at that. First thing we actually learn in technical analysis, what's the direction of the moving average, the simple moving average of the 30 period. If that line is actually turned up, it gives us an indication of current trend. Now, that line right there, that's a 30 period moving average. That's like a 6-week trend line, if you will. It's lagging, and it's lagging on purpose, okay? Now, what I want to do in this case is you're going to see that the color of the candles, why are those not normal? Well, those are what we call the trend color. Those are trend candles. And remember what we kind of said before is when we get, let's say, a little run to the upside and we only get orange colored candles, that's what we call technicians as a shallow pullback. Now, little green candles run to the upside, and then only an orange colored candle. Green, green, only one orange. So remember what we said is, how many days do you go down? Well, if the down days are less than 3, shallow in terms of the pullback. Hallelujah, okay? If we only get orange color candlesticks, we're not really seeing any deep pullback at that point in time. Same thing goes here again, okay? Little orange, 1, 2, and then just orange again, and just tippy-toeing all over the moving averages. Now, here's the thing. This has not been something brand new. I've posted about on X a couple times. They're not recommendations, they're examples. I mean, if you go back and look at weeks, I've posted probably over 21,000 times in 4 or 5 years. So you might notice some posts over time, occasionally, okay? And if we take a look at this, this has been one that's kind of a little high. Now, there's been some news lately as far as them kind of breaking into, let's say, a new marketplace, if you will. Now, that could actually open up potential profitability. Now, what you got to understand is that's already kind of some of it's baked into the price, okay, already. Now, what I'm going to do is I'm going to go back to this chart like a normal chart, and I'm going to go back to, let's say, this chart right here. Now, sometimes when we get these big candles, the open of the candlestick can really be, let's say, a potential support. Now, here's the deal. This is not a derivative-based class. It's a stock-based class. Now, I'm going to go with you that many of you probably think, well, this is up too high. Okay, I know someone's thinking it's too high. Okay, well, here's the deal. Let's say the investor says, look, I'm not going to do a full position because it has gone up quite a bit. I'm going to do a half position because the stock has been quite volatile. Okay, and what I'm going to do is I'm going to right click on that line. I'm going to go to buy custom and I'm going to go with OCO with stop. Now, when I do this, let's say buy, what we're going to do is we're going to do a half position. A standard position for this paper money portfolio would be 6,500, and we're going to actually do 32 and a half. That's really going to be about 33 shares of stock if we round up. So I'll put 33 shares of stock there. Now, what you're now going to notice is you might be thinking, well, how did you know it was volatile? How can you tell? You can look at the price movement of it, okay? But you could also look at, let's say, the beta of it. And that beta, we have a beta is actually looking at a 5-year measure. The fast beta is actually looking at a 1-year measure. Beta being 1 would be means is mimicking the S&P 500. And if the beta is higher than 1, it's more volatile, okay? How it's covaried to the S&P 500, the higher that number is, the more volatile it's been to the S&P 500 over the last year. Now, fast beta of 2 would be pretty volatile. But if we got a fast beta of 3, you know that it's actually shown a history of being more volatile. So if someone says, I'm going to take a smaller position, that's understood. And there's other ways to see volatility as well. Okay. Now, what I'm going to do is I'm going to come back to this and I'm going to say, look, we're going to set that stop right below. Now, I think the one thing that maybe people might not be fully understanding is when these stocks go up, and they just keep going up sometimes, and I'm not saying this one's going to do it, they could be added to the S&P 500. They could be potentially added to the S&P 100. They might, for example, be added to let's say the NASDAQ 100, whatever, okay? When the market cap keeps going up, and I'm just saying of a stock in general, they might be passing off criteria to allow them to, or to be invited to be on an index. I'm not just talking about Hood in general, okay? I'm talking about, you've seen this before, just like NVIDIA did and so on, okay? And Amazon, among others. What I'm gonna do is we're gonna set that stop right underneath that 91.38, and we're gonna kind of just wonder, could that trend continue? 89, okay? 55. Now, am I missing any other stock that might still be in the same realm? Broker space? Anything? Anything? What other broker might be in there? Well, if we kind of went to this, and we're gonna do 33 shares, 89.55 a stock, confirm send, and there's that right there. Okay. Now, one of the other ones that kind of might get some attention from that area, that new asset class, a small one that we've actually been seeing is coin. Now, I'm going to kind of play Captain Obvious. Captain Obvious says, yeah, this one was going up, but now it's pulling back. I appreciate that. That's wonderful. Okay, great insight. Can you tell me where it's pulling back to? No, I just know it's pulling back. Okay, well, let's kind of connect the dots here. So what you're going to notice is sometimes, where was the old resistance? Oh, I get it now. So you're saying, okay, it's not just about the pullback, it's where the pullback has been too. Ding, 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 dong. Now, all of a sudden, if you take a look at this, 329, okay, here we are. So someone is probably going to overanalyze what's been happening in the short term. Now, I don't know what type of candle you actually call that. Okay. But if we take a look at this, what you're now going to notice is some technicians might say, James, that looks like an inverted hammer down near support. I'm calling all technicians. I need help here. And if you take a look at this, that is a potential close above the high of the low day. Now, if you zoom in on this, or let me zoom back out and kind of resize this. If we take a look at this, could this really just be a continuation pattern? Now, let's go back to the fundamentals for just a quick moment. What we're wanting to really see is it a similar type business? And what you're now going to see is Coinbase operates platform for these type of assets. And what you're now going to see is, if we go back to annual, do they have something pretty similar? Well, they have also been all over the place. There, they were down, they were flat, and they actually smashed back to the upside, okay? They've been all over the place. Now, what you're now going to notice is if we go to quarterly for just a second, the last Q4 24 has been better, and this Q1 25 kind of like very slim pickings in terms of that earnings per share. When we actually take a look at this, and now sometimes the earnings per share is not telling the full picture because they could add expenses. But when we actually look at these numbers and say, are these numbers really growing? It's the second highest they've really been in the last 4 to 5 years. What could cause that to go up higher? Well, might actually just be product interest, okay? Adoption, regulation, all that. And regulation is not just in one industry group, it's in pretty much all of them, okay? Now, what you're now going to notice is what we're going to do is we're going to try to buy on the bounce here. Now, the investor might say, well, James, I want to see that moving average cross. I want to see us get above the moving averages. Noted. But some investors might say, James, I'm going to buy a half position right here close to support. If we came down and said, look, we're going to take a half position, 32.50, that's going to give us about 9 shares. If the moving averages go back green, if we actually cross over, the investor might say, James, I'm going to add to the position. And now what we're going to do is we're going to say, look, we're going to try to buy a little bit closer to support, 355.50, going to set a stop underneath that 329.39. And if we did that, it's going to give us a stop of 322.80. Now, I think a lot of times when we trade stocks or whatever, we think the stock is just impacted unto itself. But you got to understand, just like energy stocks are affected by crude oil, gold stocks are affected by gold price, etc. Among other things, other examples, we got to be watching what could cause that revenue and earnings per share to increase. Now, in closing here, that stop, what we're going to do is going to set that at 322.80 dated GTC. What we're also going to do here is we're going to say, look, if we get at or above this moving average, I'm going to set an alert. Sometimes we have good intentions, we just forget, okay? Now, what you're now going to notice is if we get at or above 375-ish and change, let us know. And if it does that, then that's most likely going to be a moving average crossover. That's where the investor might say, James, I'm going to add to the position, okay? Now, I'm out of my time here today. Stay tuned. So we did a couple of examples. We focus a little bit on some of these broker spaces that actually are kind of have a specific interest to that new asset class that came out about 5 years ago. Whenever we talk about investing in general, there's risk with all of it. That's why some investors position size and set stops. We also did the example on Oracle as well. So stay tuned for actually Michael Fairborn coming up next at the top of the hour. Thank you, Connie, for answering those questions in chat. And thank you for being nice and apologetic. Jack says he was sorry that he accidentally chewed on the cable. It's a joke. He didn't do that, but I saw that in the chat. He wouldn't dare. All right. With that said, thank you so much. And this has been the class on trading growth and value stocks. Stay tuned for Michael Fairborn coming up next. Bye-bye.